There's always stories that a lot of buying through Korea is actually coming from China. Always rumors that a lot of traders on Upbit are actually Chinese. Tron is a massive issuer of USDT in China. Since a lot of this market cap is going through Tron, that Chinese are definitely have turned on the liquidity pipes.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, welcome to Presto Research Podcast. I'm your host, Peter Chung, and I'm joined by my teammate, Min. Hello, Min.
Hey.
And a special guest joining us today is Marcus Thielen from 10X Research. Hi, Marcus.
Hey, Peter, how are you?
Pretty good yourself?
Yeah, doing great.
That's good. I just remember you were the first guest to our podcast back in April. So come a full circle now after 4 months, 5 months. So welcome back.
Thanks for having me. I mean, how is the viewership going?
Viewership, we're getting there. Could be better. We could do more, which is one of the reasons why we invited you back, because I'm sure a lot of people wants to hear your views on what's happening in the market. And Bitcoin's kind of been, I don't know, maybe range bound. Had a good bounce back since Liberation Day shock in April, and have been trying to, break through the 120,000 all-time high levels, but not very successful so far. So maybe, and then it was interesting that you mentioned in your recent note that this week is actually one of the most pivotal weeks for this year for crypto. Maybe can you elaborate that a little bit on why you said that?
Yeah, so of course, a lot is going to happen this week in terms of economic data. Of course, we follow very closely the ISM and the components of the ISM, and they have been sort of, it seems to be quite right over the last probably like 18 months in suggesting and predicting that the U.S. employment data is actually massively overstated. So I think that's where really the focus is on Friday's employment report, but also then based on next week's potential BLS revisions data. And I think we have already heard, of course, a month ago that the revisions were probably around like 800,000 up to last year. So we don't really have the revisions for this year yet. But it really seems to be also based on another data source that probably the non-farm payrolls side has been overstated of the last 2 years by around like 100,000 per month. So while the market really saw this as potentially, a reason to cut rates and to confirm the rate cutting cycle to resume basically this month, it really kind of, could be like a situation where actually the rate cuts are justified. And that is actually very different than kind of looking for the rate cuts as a liquidity burst that every crypto bro, every crypto Twitter guy is trying to tell you. So, while rate cuts per se have been, bullish for US stocks and for Bitcoin almost like every time, but it doesn't mean that there's first, a massive movement of pain really. And I think, people like to point to March 2020, to the COVID rate cuts, how Bitcoin really, had this explosive growth after those rate cuts. But of course, Bitcoin also had like a massive 50% crash into those rate cuts. And I think that's something, we sort of like shouldn't forget. So of course, if there's some adjustments as we saw last year after the BLS revisions, where basically the Fed panicked and cut interest rates by 50 basis points, only to really realize a couple of weeks, not months, but a couple of weeks later that those rate cuts were actually not justified because the labor market was holding up. So it was really sort of, like a friendly liquidity, free liquidity into the market. And that caused really the rally last year. And of course, if we get into a scenario this year where the rate cuts are actually justified because the labor market is really weak, then I think we can go through some corrections. And I think that's going to also have negative implications for Bitcoin. So it's really like this, this kind of, this equilibrium really between, the slowdown and, the free liquidity that everybody is looking for. And I think that's kind of really, the variable we're looking at. And we have been cautious really coming into August and we're still cautious, this month. I think, of course, there are some short-term trading opportunities here and there, but overall, I think this week is very pivotal in terms of the economic picture.
Yeah. So I think there's a lot of uncertainties in the market right now, and a lot of investors probably wondering what's the best way to position themselves ahead of all these uncertainties. And I don't know, like I was thinking maybe the best way, I think, given the uncertain outlook this week and a few weeks ahead, maybe like a sort of like a barbell strategy where you have some sort of like a strata type of approach with option is a good approach, or maybe having some positions in altcoin might be better, like more specifically in terms of how you express your views. I mean, do you have any thoughts on what would be the best way to approach it?
I mean, on the one side, of course, there's a huge volatility spread between, Ethereum, which is, implied volatility is very high, more than 70% versus Bitcoin's implied volatility is around 30. So, of course, here's an interesting trade, where you can buy, exposure in Bitcoin, be it upside, downside, and sell basically exposure, in Ethereum, against it, or you have a put spread, in Bitcoin, for example. We are not like massively bearish per se, simply because there are also some, potentially more bullish, tailwinds, right? Of course, something we pointed out, a few weeks ago and recently also, again, is like this potential breakout in gold because of the US indebtedness that actually increases quite rapidly, especially since the big beautiful bill and the debt ceiling has been increased by 5 trillion. And we have already issued like 1 trillion since then. So 20% has already been issued in 2 months. So basically the 5 trillion, which is supposed to last through, Trump's presidency, might be actually exhausted after one year, basically. And especially this uncertainty about that the US tariffs might be illegal. Of course, now it goes to the Supreme Court. I think that also adds some uncertainty. But, as Trump has been, basically, begging overnight, really, that they really need, the income from these tariffs. Otherwise, the fiscal situation wouldn't look so great. So it's almost like where the markets are like suddenly like really worries or starts to worry about it. And I think that's also something that really, comes to mind why this week is quite crucial. And I think it's also that, in terms of like the European bond deals, be it, the French, be it the German, or be it really the UK bond yields are also kind of like pushing towards resistance levels that have been kept the yields for the last 3 years. And it really seems like we're really close to breaking out of those yields. And I think that's also something that can actually add a lot to instability. And of course, instability can be quite bullish for Bitcoin, but normally it actually has some negative implications in the very near term. So the way how we, sorry, just go ahead.
Go ahead. No, go ahead. Yeah.
The way how we sort of like approach this is that we recommended over the last kind of like 2 months to hedge Bitcoin exposure by, for example, shorting Coinbase. I mean, we were quite bullish in May, but then 2 months ago we turned quite, bearish because of a lot of the good news was priced in. It was overvalued based on our regression model. We had something similar with MicroStrategy, where we expected actually the decline in Bitcoin volatility would have negative implications for MicroStrategy's and NAV, which has come in. It is still relatively high, but now the stock actually looks, almost like at a slight discount to BTC as just based on a regression model. But we were looking more at hedging some of those side pockets this way. I would actually think that Ethereum might be, a good hedge here for Bitcoin, because this 106, 108 level in BTC, we thought it's going to be very tough to break. We think actually it's going to break, this month, but nevertheless, there's going to be a lot of fighting going on, because it's very important from a psychological perspective. It's very important from on-chain data, because this is like with a short-term, realized price, basically the average price of everybody who bought Bitcoin the last 155 days is. But it's also a big moving average that we're looking at, and some other technical indicators. So we thought this level will be, tested several times before it's going to break. Of course, we had this little bounce now from this level, but we do think it's going to be retested and probably is going to break. But I think then it's going to offer, an attractive opportunity to be long Bitcoin again. It's just, as you asked, as you wondered, what are really the best trades here? And I think when you look at, sort of like the periphery of, anything away from Bitcoin, anything that is higher beta, I think it is at risk simply because the funding rate is coming in. We already seen that the funding rate for BTC was relatively low. Couple of days is not weak, so that's why I think the ETFs have been slow and quite weak. And I think we have seen a lot of inflows into Ethereum, but that is sort of running out, based on various aspects. And I think that's why also it can come in, and because it has been the higher beta currency here. But I think the simplest way is really to use put options right now because the implied volatility is very low. I think straddles per se is very difficult to sort of like realize. I think to make money with an at the money straddle, you really need Bitcoin to move, above 116,000, which might be difficult. It might be easy depending, but I think it might be better, having like, the put spreads at, let's say, 108, 100. And then when we get there, just sort of like close it out and then position for the upside.
Yeah. Well, I mean, you touched on a lot of things that I wanted to kind of address later in the conversation. So maybe let's go through one by one. You mentioned Ethereum. So let's talk about that. So it's obviously, I mean, Ether has done really well the last couple months. And then what I thought was kind of interesting is that when Ether was underperforming, the narrative was so different. It's a classic example of how the price drives the narrative. So when it was underperforming before July, everybody was saying that, it's underperforming because there's a value leakage. All these L2s are not paying fair share of their fee income to the Ethereum, and because of that, Ether is not really doing the value capture, and that's why it's underperforming. Also, people talked about competition from Solana, for instance, and other chains, and all of this talk suddenly kind of disappeared, right? Nobody seems to care about these issues anymore now that it is outperforming. And so I was kind of wondering, do you think these things actually, because these problems still exist and has not been addressed, but yet the market seems to kind of don't care about these issues, overlook them. What do you think is happening here?
Yeah, I think, Bitmine single-handedly drove the narrative. I think the concerns, and we were very bearish since basically summer last year. So I think we caught the move lower, I think, quite well. And our narrative back a year ago was that really the revenues are quite low, that the revenues are really not matching the Ethereum price, which was in 4,000 last year really. So I feel like we drove the narrative quite well until basically everybody adopted it. But, we had a technical breakout because some of our, reports focus on those technicals, focus on, technical signals really. And we had like a signal when Ethereum, I think, was at 2,600, which seems like, ages ago now. But it was more like a technical signal. But I think the narrative, and we, of course, have seen that Bitmine has bought, 8 billion Ethereum now. The chairman of, Bitmine has been on TV almost like every day on every podcast. So it has been, a really well coordinated, I think, media appearance. And I think there has been also a really great story how to tap, institutional sophisticated investors and really sort of like flip those positions then into the hands of institutions, in the retail investors, not institutions. So, and I think here, what we normally have is that when an IPO, goes public, when a company goes public through an IPO, you usually have like a 6-month lockup. But of course, here the lockup of those shareholders was a lot faster. So basically, when those shares were registered, so basically when the deal was announced until it was officially closed, it was just a week. And then basically when the shares were registered with the SEC, which was 20 days later, those investors, sophisticated investors, could sell half of their shares. And then another 30 days later, they could sell the rest. So now all the shares of the institutions are unlocked if they wish. They could have been, selling already. And I think everything maybe has been flipped to retail investors already that bought really the shares at a 10 times net asset value. And of course, have capitalized those, the company at these higher levels. So I think that really drove a lot of the buying, where people sort of had like no clue actually what is the NAV of BitMine, for example. They had, for example, 11 SEC filings in August alone, so it's very difficult to really keep track of those filings. It's very difficult to kind of, a lot of the filings are delayed. They don't have to be filed immediately. So actually nobody had any idea what the fair value is, except of course the company, and the company could, use that NAV really then to raise more capital and basically buy more Ethereum. But I do think they have come to an end now, simply because the lockup has been reached from those institutional shareholders. The NAV is actually quite small, so it's very difficult to really issue new shares here. And I think the momentum is a bit fading in Ethereum. As you correctly said, it's really sort of like just the narrative that people are playing. And the narrative is, of course, to buy Ethereum, on the potential, asset, hoarding that it might, make some money on stable coin issuance down the line, which, is potentially some time away. And Ethereum doesn't really make a lot of money based on these, stable coin issuance. It's just, very small. So in the end, it has been like a classic story that a large sophisticated buyer really has entered the market in a less transparent way, right? We have, of course, MicroStrategy, which is extremely transparent. That of course helps to determine quite timely where the NAV is. But with BitMine, we're not really aware. But if also it coincided with with the Genius Act, it coincided with the big crypto week in the US. And almost more importantly, it nearly coincided with with the Circle listing. And I think even more important, it coincided with with sort of like the post-election wave in Korea, with the whole narrative about stable coins there. We know the Koreans have pumped in 2 billion into Circle. Even the price went from 300 to 120. The Koreans bought, more than $1 billion in BitMine, and they leveraged Ethereum ETFs in SharpLink. So I think the Korean flow actually has been quite aggressive into crypto stocks, and it definitely helped. And it definitely helped that, that BitMine has some, Korean links here. I think that's all kind of like how the narrative really sort of like closes. And and as we know, the Koreans are really fearless,
You're right there, Marcus. So you're in the middle of the action. Although maybe, I guess it happened since July, so maybe you couldn't really catch all of it. But yeah, Tom Lee was also the fact that maybe Tom Lee is a Korean American maybe helps getting attention from local investors in Korea, perhaps. I heard he was in Korea recently and was doing some round of interviews there as well.
And he's in Korea right now.
Right now, okay.
He's right now here. He also has a deal with Spree Pro TV, so it definitely helps, with his viewership. So again, I think what we're really seeing this cycle is really, Wall Street pros, running a really well orchestrated, capital raising approach here, right? So, of course, the story, the story is great, right? The price targets, the price targets are, of course, massively lofty of 15,000, 16,000 that have been throwing around. And I think it might be, difficult. It might be difficult to achieve, but I think we have seen, for example, already a slowdown in Ethereum ETF buying. So the ETF buying was 5.2 billion in July. I think it was like 3.9 billion in August. So there was a marginal slowdown happening on the US listed ETFs. And as I was saying, a lot of the 2 times leverage ETFs have been bought by Koreans. I think the Koreans are actually also buying 90% of all the Solana ETF, listed in the US, which is quite interesting just to look at the flows there. But I think the interesting aspect is also that when we look at on-chain data, it indicates that more than all the flows into Ethereum this year has really been pumped in the last 2 months, really, right? Before we saw some outflows, and that was the weakness. But it's really the last 2 months of this narrative. And I think the interesting aspect, how we look at it is that, yes, Ethereum implied volatility is around 70%. The call to put ratio is, 2 times outstanding, the puts for the calls. But of course, unless Ethereum rallies here, these puts going to lose a lot in theta value, and therefore they will be closed out a little bit earlier. And there's a lot of puts out, a lot of calls outstanding at 5,000 because people were very bullish going into those weekends of the last 2 weeks. But if we sort of like hang around here, people naturally have to sell some of their calls simply because of the theta value that it loses. And again, the option expiry end of September is quite important. And I think that's going to cause some unwinding of the Ethereum position, simply because when you have to sell your calls, then somebody has to sell, the hedge, which is usually long futures. And I think that's why we're going to see some natural selling here. And at the same time, the funding rate for Ethereum has come in. It's below 10%. And that's usually when the ETFs are like, stop. And I think we might be going through this process. It has been, a fantastic ride. I think it has been a big rally, but we would be, quite cautious here.
Do you think the digital asset treasury narrative will be dead soon? Because retail should soon realize that it's basically institutional or big whales basically dumping to them in a high premium, right? Do you think the narrative would continue, or because now we are seeing like Dogecoin, that's like Story Protocol or whatever. So do you think this trend would continue, or it will be soon like short-lived?
Yeah, I personally think our view was really that of course I think those trades come and go, and I think one big factor was really when we because, for example, we have been writing already like 2 years ago how MicroStrategy would issue shares every time the NAV would be 20% in the premium, and we could almost really predict by within a day when they would come out in 2023 and issue new shares. And it really showed how MicroStrategy's management team was actually quite sophisticated in financial engineering, and I think they have of course become a lot more sophisticated. But I think it was really where MicroStrategy's NAV really just moved 20% into premium, and that 20% could be exploited and issued more shares. That really was that extra premium. They bought of course more Bitcoin, and I think it made a gradual decline. But what happened actually, of course, last year in January, the Bitcoin ETFs were issued, but it was really only in late February of last year when the NAV really started to go 1.3x, 1.4x, and really started to really expand massively. And of course, it was a big push from retail investors buying really MicroStrategy. And of course the Koreans were heavily involved. Again, they bought all these esoteric second and third and fourth derivatives of MicroStrategy. But I think the interesting aspect is really when Bitcoin climbed above 45,000 last year in February, which is sort of like the average entry salary in the US, which is sort of the average price of a new car in the US. That's when a lot of people appear to kind of judge that one Bitcoin is like too expensive. I mean, nobody wants to buy, a fifth of a Bitcoin, right? And of course, everybody knows you can buy a fraction of a Bitcoin, but it's certainly not sexy to, I own like 0.1 Bitcoin, right? I mean, nobody wants to own like a fraction of something, right? And that's probably why also fractional share trading has not really taken off, right? Because I don't want to own like a fifth of, an Amazon share or something. So, but the interesting aspect is that at that moment, when it seems to be that Bitcoin became too expensive for a lot of investors, for a lot of retail investors probably, that they then jump not necessarily on the Bitcoin ETFs, but especially on MicroStrategy. So then the NAV really started to explode. And when you look at the window, for example, in December on a 30-day sort of like rolling capital raising, in December last year, MicroStrategy raised like 15 billion, which is of course enormous, because they have raised year to date around, or not year to date, they have raised since August 2020, they have raised around I think 45 billion, and around 40 billion has been raised they have since early last year. And basically, they have massively raised since early last year, but it's basically, the break around is around that. They have raised 22 billion at an NAV of 1, and they have raised 18 billion at an NAV above 1. So basically, when we break it down and separate it, that means, whoever bought these shares, they literally donated $18 billion to MicroStrategy and to existing shareholders. So, and of course, that's a lot of money. And, when you look at the NAV, it's around 1.3 times right now, but it used to be at 3 times. So there are people who basically paid 3 times the price because they expected they're buying some leveraged exposure as there would be, buying into leverage exposure of a gold mining company. But of course, those crypto companies are hardly levered. I think the outstanding debt is only like, 8 billion from MicroStrategy. And, of course, when the NAV comes in, so will, the leverage, which is actually negative or the inverse leverage, from the beginning. So in the end, there's a lot of investors that have actually massively lost, I think, money. I would love to hear some data. But, when we look at in November last year at the peak, MicroStrategy traded $40 billion. So there has been, a lot of shares have been, changed hands really at the peak, which was, $450 or something, versus now we are at $330, $340. So a lot of people have bought and a lot of people are underwater. And it doesn't really matter if the per share value goes up when you lose on the NAV or when you lose on the stock value per se. But again, the people who have bought it, they're the ones who are losing. It's really not the company. I don't think there's any risk that the company would go bankrupt, that the company would liquidate some of the holdings, that there's a risk of bankruptcy. I think that's not the case. It's just a lot of shareholders have bought at the wrong price, and they are suffering, the losses. I think up until this day, I don't think really many investors look really and understand really what the NAV is. They just assume they want to buy some leveraged upside, and that's why they buy these companies, because it's a great story. It's also a great story to buy, for example, Bitmine, because it's supposed to be one of the key companies benefiting from from the stablecoin bull market that we're supposed to see. But of course, it depends where you buy. And I think, as I was saying earlier, it's very difficult to determine where you actually buy, because you don't know where the real NAV is, because you don't know when the shares are being listed, how much has been raised in the background, because there is a delay when the shares are being registered. You're not, unless you're an institutional investor, you don't know about the pipe. All these factors. So I think it's just very, very difficult to make, an informed judgment about these things. But I do think that, this wave is coming in because some of the narratives are sort of like running out, and the narrative is running out if Ethereum stops going up. I think that's kind of the factors, and and that's how we kind of like have approaches, and that's why we looked at put spreads, I think 2 months ago for MicroStrategy. And there are other ways. But I think what's interesting is if companies like Bitmine trade at a negative NAV, which we think is really possible, that it trades at an NAV of 0.9 or maybe 0.8. I think then buying the shares and selling Ethereum calls against it might actually be quite interesting, because it would allow us to capture the discount in the NAV while actually selling the premium in the Ethereum options, which is, of course, right now extremely high, especially relative to Bitcoin. So that's a trade we have been looking at. That's a trade we have been recommending to our subscribers, and trying to structure a smart trade around it.
Right. Yeah, that's interesting. Yeah, it's a shorting call option on the Ethereum. Yeah. Now maybe shift the gear a little bit and talk about something else that you mentioned in your earlier comment, where you talked about, I guess, more of a traditional macro type of a risk coming from different parts of the world. And you briefly mentioned about Europe. Now, how about China? I think we talked about it last time you were on the show, how Chinese money can potentially play a role in the current cycle, given the PBOC's intention at the beginning of the year to provide monetary stimulus. And I think recently PBOC got together again in July to reiterate their intention to continue with monetary stimulus for their economy. And perhaps because of it, the Chinese local stock market has been doing really well since July, and has, I think, outperformed the rest of the world for the last 2 months. You think this can potentially have a spillover effect into the crypto market as well?
I mean, the Chinese have been, massive buyer of crypto over the last, 10 years. So I think we already seeing that, they have been, of course, involved. There's also, of course, always stories that a lot of the buying that goes through Korea is actually coming from, from China. There's always rumors that a lot of the, traders on Upbit are actually Chinese and not necessarily, or not purely Koreans. That's, I think, always the story here. But I think what we have been seeing, I think there was, for example, last year in August, there were several, OTC, currency dealers that were punished in China, and that's really when the minting stopped really in USD through Tron. I mean, Tron has not issued any USDT from between August last year to January this year. And it really seemed that this has been like related to some, onshore regulation about basically OTC FX desk. But since then, actually, it has started again. And of course, Tron is, a massive issuer of USDT in China. And I think that's going to be seeing how the market cap of USDT is increasing, the last couple of months. So I think we can actually say that, since a lot of this market cap is going through Tron, that the Chinese are definitely, have turned on, the liquidity pipes here. And I think some of them is flowing into crypto. And I think that's, I think when we speak to the Chinese, to Chinese investors, Chinese subscribers, they are, of course, more interested in Ethereum than in Bitcoin per se. I mean, Vitalik has, very deep connections into China. I think without China, Ethereum would probably, have died already in 2016. So it was really the Chinese recapitalization for Ethereum that really, helped it and saved it. So I think that's why also this rally has been to a large extent driven in Asian hours. It has not really driven, in US hours. I think it's really driven by the Chinese, by Koreans. And yeah, I mean, there's been like some spare capital, as you said. The stock market has been doing well. Nevertheless, I think, the property market still seems to be struggling. But again, this usually tends to help the stock market if the property market struggles, because it doesn't really give a lot of people, different, alternatives to invest. And that's why they always go to the one that performs the well. And that's why we're always seeing, these mini bull markets, in China. And I think that helps crypto, and I think that has helped Ethereum, and it helps really this minting in stable coins that we're seeing the last couple of months, that I think has really started to ramp up, especially since last month. I think we had like more than 11.8 billion being issued in August, and that has been the strongest months, all year basically. Yeah, I think the big story is, of course, that the US debt issuance is really ramping up quite aggressively, right? It's really that already 20% of the debt ceiling has been really exhausted in less than 2 months, really. And again, this was supposed to last over, the nearly 4 years of presidency, for Trump. I think that's a big story. I think the story that European bond yields are going higher, while at the same time, growth in Europe is really near zero. I mean, China has really, helped to deindustrialize Europe. So there's no growth factor, from anywhere. And one big story, that we published through our research is really that if there is, US dollar, US denominated stable coins, easily accessible in Europe, that we're probably going to see a lot of capital flight coming out of Europe through really stable coins. And I think that's probably a theme that is, not really understood, I think, by the market. I think, the ECB has been quite critical of stable coins. And I think it's really the worry that, if suddenly your economy in Europe, implodes, before, you had to just, kind of, go to the bank and, ask for your money and then store your money under your mattress. But I think these days you can just, easily on-ramp it to, some of the, the fintech banks, send your, your millions of euros, from your from your Deutsche Bank to your fintech company, convert it into, USDT or USDC, and just send it overseas, and you're out of the, epicenter. So I think that's something that is probably going to become quite critical, including, capital controls. I would be really worried about that, but I think that's probably going to be like a big driver that is underappreciated, because people are just going to focus on, the Genius Act in the US and what it means. But I think it's more that the European, economy, for example, Germany is in a recession for like 3 years. So it's almost like the default economic situation now. There's no debate really, how they're going to achieve 1% growth. It's just, just be happy with like 0 to minus 0.5%, growth really. And I think so that's going to be, I think, a big theme. And of course, the narrative around, Solana as potentially the next treasury, asset. I think we're seeing that. But of course, the question really is really the big money, coming into it or not, if people have so much capital, to deploy. And I guess the Ethereum story is, of course, alive, and of course, everything around Hyperliquid. I think that's also a narrative. I think that's going to keep on growing. But again, I think this cycle, it's not about changing the global financial system per se. It's more, how can crypto stay relevant in terms of AI? How can crypto stay relevant within the stablecoin issuance? Because stablecoin issuance is sort of like a money market, and it's really tough to really make money with it. I think you really need like billions and trillions of dollars, unless you are Tether and everybody accepts that you're not paying out any of the interest. But I think it's just sort of like, I'm more worried about, the risk of some of those unwindings, and we're seeing the narrative suddenly to play out in gold. And I think that's sort of like what's really driving, because we're not seeing like a big theme. We're not seeing, for example, an NFT theme. We're not seeing a DeFi theme like we saw, for example, during the last cycle that's really driving it. It's sort of like, a few bull markets here and there come and go. And I think it's important to catch them, to be tactically ready. But I think it's also then to lock in profit and sort of just wait for the next opportunity, instead of buying into the narrative and then sort of like seeing prices decline. And I think that's sort of like in a narrative we are with Ethereum right now.
All right. Yeah, that's a really interesting insight. Yeah, unfortunately, I think we've come to the end of the conversation, so we have to wrap it there. If people want to find out more about your views on the market, like, where can they find you?
Yeah, everybody can visit our website, research.com. We publish frequently. We publish everything from market updates to, trading signals to more strategy reports. But everything is actionable. Everything is, what is a trade really? What does it really mean for your portfolio? And, what's really the next trade? I think that's how we focus on. And that's what our subscribers really value, highly, what we provide.
All right. Sounds good. Okay. Thanks a lot for your time, Marcus. We're going to end it there then.
Perfect. Thanks for having me.
Bye.
Bye.